Good afternoon, good evening, everyone. My name is Yan Shu. I'm representing the Chinese Institute of Engineers, San Francisco Bay Area. Welcome to today's seminar. Today we have a very unique topic on crypto in real estate. And we have three speakers from the company Milo, which will introduce this niche concept and to all of you guys. Before that, please allow me to take three or 4 minutes to introduce our organization and also a little bit about the three speakers today. So let me change slide. And here's where you can find us. We have a website. We also have a bi-weekly newsletter if you scan the QR code. And we're on multiple media channels on Facebook, WeChat, LinkedIn, YouTube. And our YouTube channel has lots of the recordings of our past events. So I highly recommend and encourage you guys check it out. And today's video is being recorded and will be uploaded on YouTube, so you can watch again if you would like to. Our organization or society was established in Cornell University in 1917, more than 100 years ago. We were founded by a few very early students from China, Zhan Tianyou and Lin Hongxun. So the organization is 105 years old this year, and our Bay Area chapter just celebrated 100th anniversary in 2017, and we will have we have 105 anniversary this year in 2022. Okay, so our Bay Area chapter was established in 1979. San Francisco Bay Area is also known as Silicon Valley, the incubator of many new technologies, and therefore there's a huge community in technology, in science, and we are a nonprofit organization serving engineers and students and young professionals in San Francisco, actually all professionals in the Bay Area engineering community. Our missions include promoting technological advancement, networking, and communicating among engineers and scientists to really promote the well-being of engineering community. So our chapter has celebrated the 40th anniversary in 2019. So you can see many famous people and influential people from the community. Okay, so we hold many seminars, technology speeches, and also networking events, and job hunting events, and some tutorial workshops in the US. And so from in the past or couple of years ago, our activities are mostly offline, and we held many in-person events. We invite speakers to a venue, to a conference room, and our audience meet speakers in person. However, since pandemic, we have moved many or most of our activities to online. And I just want to mention today, the group that is holding and supporting this event is Electronic Design Technology Group. And so we really value the power of networking in CIE-SF. So myself, as example, I joined a barbecue event about 5 or 6 years ago, hosted by CIE-SF, and I got to know other people like me who recently moved to the Bay Area for work, for a job, and there are many other people like me who studied engineering and work as an engineer or a technology group here. So since pandemic, we have moved most of our activities to online, and we have been pretty successful in that. We held several tens of Zoom webinars, also this game town environment, and we find this very strong, very helpful to connect with people during the hard time. And to show you guys our Eventbrite page, where we post all our events there. Most of the virtual events, they require a Eventbrite registration, just like today. And the Zoom link is available about 30 minutes or 1 hour before the event starts. And our website also has a list of ongoing events. So when we talk about technology and engineering, we often think about physics or chemistry or others, but these technologies in blockchain, in Web 3.0 is also our. We also follow those topics quite closely, and also for professionals in the Bay Area who really care a lot about financials, investment, and real estate. We also have had some investment education seminars like this one, Investment Truth, Staying Rational in Times of Market Volatility, to get us more exposed to the market and to understand the market, And you can find our YouTube channel YouTube by searching CIE-SF. We keep most of our recordings on the website, so you can play back. Okay, today we have Milo. We have 3 speakers from Milo. Let me quickly just read through the topic here. In 12% of all home sales in 2021, buyers sold crypto to use as a down payment. Milo provides consumers an opportunity to obtain financing for real estate using their crypto as collateral. 2 primary benefits of this loan include: 1, avoid paying capital gain taxes on your crypto sale, and 2, to preserve your liquidity with 100% loan to value offering. So today we have the honor to have 3 speakers from Milo, Aaron, Rafael, and Colin. And I have a very short bio each speaker. I will quickly read through them, but I think they will make an intro as well. Aaron Drucker, he leads the loan and business development team as Milo. He has over 17 years of experience in sales and operations, scaling organizations. Most recently, he led teams at Better.com and Redfin. Rafael, he's a product manager. I understand he is from Brazil, currently in Miami. Rafael is a crypto and blockchain early adopter. Milo is the second lending fintech that he has helped to build. Previously, Rafael was a product manager at OneBlink. And lastly, we have Colin, the lead loan consultant. During his 6-year career, Colin has closed over 600 loans and ranked within the top 5% for customer satisfaction at Lennar Mortgage. At Milo, he leads our team of loan officers. Colin, is loan product knowledge includes conventional, jumbo, investment, crypto, and foreign nationals. So without further ado, I will hand over to Milo for today's seminar.
Awesome, thank you.
Thank you. I'm going to share my screen.
And overall, we want this to be pretty interactive with the audience here. So, hopefully there's a lot of questions for us that you guys have at the end.
Yeah, this definitely, we want it to be engaging. If you want to send your questions through the chat, we're going to have a period at the end to ask questions, but this is about information, right? And just learning. So I'll just dive right in. I want to tell you a little bit about Milo. So I'll just tell you the story. It was originally created by our founder, Joseph Rupina. He worked with a lot of folks in wealth management, and many of them could not get a mortgage if they were overseas. And so he found that was a major problem he wanted to solve. And he started the company to serve foreign nationals who needed a mortgage. And that's how Milo was originally born. And we've then morphed into our second product, which is one of the best products that I've seen on the market for crypto in the crypto industry, which is our crypto mortgage. We have a lot of investors on the venture capital side that have backed us. We've raised about 25 million so far. We're about a team of 54 people. We have folks in Miami where we're headquartered, and we have folks in Colombia as well, and we're a direct lender.
Just talking about a little bit of our team, we have 54 people, but we have 12 different nationalities. People from Pakistan, Ukraine, Colombia, Argentina, Brazil, US, and you name it. So just we
take a United Nations approach to hiring here at Milo. So one thing about Milo and just mortgages and lending is, when you think about crypto, it's been a challenge to be able to use crypto as an asset class, to be able to use it as collateral to get a mortgage. We don't have regulation right now. I know that's something that's being talked about. It could be coming in the future, but right now it's tough for folks who do own crypto to be able to pledge it as an asset and get a mortgage. I wanted to share some stats with everyone. So you may or may not know the average age of the cryptocurrency investor is 38. Now, I was a little bit surprised by this myself. I assumed that it might be a little bit younger, but it looks like there's all different age ranges that are investing in crypto. And this is the first-time home buyer price, or I should say age range, where people are really looking to buy real estate in this 30 to 40 range. Another incredible stat was 4 billion of real estate transactions have been completed on the blockchain. And interestingly, only 14 out of 100,000 real estate listings accept Bitcoin. So most sellers today do not accept it, which is why we came out with the crypto mortgage, so you can use it as collateral. I'm going to pass it off now to Rafael.
Okay. Hi, guys. Thanks for the amazing intro there, Aaron. But what I want to do is try to dive in a few different ways that we notice that the crypto consumers are buying real estate, right? So the most common ways of buying real estate is through a mortgage. 90% of the home transactions in the whole United States were done with a mortgage. But the biggest problem that Aaron already mentioned is the banks, they don't take crypto in consideration at all. So to make this happen, the consumer needs to think in advance, and they have three options of doing it to come up with the money for the down payment. The first option is the first one on the left, is the consumer is going to sell the crypto, right? So for that, there is two big problems, at least in my view. One, he's gonna have to pay taxes on top of that. So especially you folks, you guys are based in California, and you know the taxes is not a joke. You actually pay a lot of taxes, and if you make a lot of money in crypto, whenever you say you sell whatever you make, you might end up paying 40% of the total value. So if you are selling your crypto to convert to dollars to get a financing, you're gonna pay around 30 to 40% in taxes, which is horrible. You're already gonna have to sell more crypto than you need to pay it off. And the other one is you're gonna lose your position. You're not gonna have your crypto anymore. And we know that for the true holders and for whoever is deeply invested in Bitcoin, they don't want to sell it. They want to take a leverage on it because they believe in the asset class and they believe that the asset class is going to go up. So this is the first way that people are doing it. They sell the crypto, convert to dollars, put a down payment, and get a mortgage. Or there is the second one, which is borrow against crypto with CIE. Can you pass the slide,
Sure.
Aaron? Just to say, one is pay cash, the other is going to be central finance, right? So to borrow against crypto, there is a concept that I believe that most of you already know is CIE. CIE is central financing, centralized financing, which means that a lot of people are going to be using companies like BlockFi to get a loan, which means that you need to put 3 times the amount of Bitcoin. You put $300,000 worth of Bitcoin to get $100,000 worth of $100,000. So it's 3 times over collateralized loans, and with a high rate and a small duration. So every year you need to figure out what you're gonna do with this loan. Probably refinance, and then you need to pay fees, and it's not the ideal product for you to use to get a mortgage. We've seen huge adoption in the CIE. People from BlockFi, 22% of people that got loans with BlockFi was a loan that was related to a real estate transaction. And the other one is a DeFi, right? You can go to amazing protocols and you can definitely see amazing products out there of decentralized finance that you can get loans. But the loans that you're going to get is not going to be in dollars. It's going to be in stable coin. And then you need to find a way of converting these stable coin to dollars. Whenever you do that, you're going to convert to dollars, and then you're going to have to apply for a regular mortgage. With that in mind, that's why we came up with a product like the crypto mortgage to reduce friction from the customer, which means that the customer are now able to get a mortgage without all the hustle, without having to pay taxes, without having a short-term loan and pay high rates and keep refinancing or figuring out what to do in the next year, and removing the friction of having to get a loan in the protocol, which a lot of people don't know how to get a loan in DeFi, and then later on to convert that to USD. So there is a ton of friction in those 3 models. We try to see what are the way that we can improve those 3 models and just tackle all those pain points at once. So if you pass the slide, Aaron, we're going to be able to see that we came up with the world first crypto mortgage. I'm really happy to say that because it was a lot of hard work. Joseph, our CEO, and I, we spent multiple nights designing how this product would be, not only in the back end, how we're going to do the calculations, how we're going to present the thing to the customer, but also in an amazing front end, providing to the customer a really good customer experience. So based on that, I really believe that most of the questions that you guys are going to have, we're going to tackle in the end. But right now, I'd like to give the voice to Colin. So Colin can explain a little bit how our crypto mortgage works.
Perfect, thank you. Yeah, so I'm just going to go through, kind of how our product works, and Rafa went over the disadvantages to purchasing with crypto. So, our product obviously is a solution for those disadvantages. So the number one is that you get to keep your crypto, right? As Rafa mentioned, if you sell it in order to buy property, you no longer have your position. If you're a long-time believer in crypto, if it goes up over the next 2-3 years after you purchase, your position's gone, you don't get that appreciation. The second biggest thing is that it's more structured like a real mortgage. So 30-year term, you don't have to worry about how you're going to pay it back in 1 year, 2 years. Rates are more in line with what a mortgage would be with, rather than what a short-term crypto loan would be. The third big thing that we're able to do is we kind of get around some of the underwriting that is included in traditional mortgages. So a lot of times, especially with the new industry, it's harder to report your wealth on like tax returns, W-2s. When you're looking at a standard mortgage, that's a big part of it. But since these customers have the crypto wealth, we're able to underwrite it in a little bit of a different way to make sure we're able to provide people with this wealth with financing. And then there we go, a few more. So we can close quick since we're avoiding a lot of these underwriting things. We can close it rather quickly. And then one of the biggest things is no down payment. So since you're putting your crypto with us as collateral, so we have the property and the crypto, the buyer actually doesn't need to put any down payment in. So you can get 100% financing on the transaction, which is basically unheard of in the mortgage industry in general. So compared to some of the loans that Rafa was speaking about, like BlockFi, 2-to-1, 3-to-1, the way that we structured our product, we're able to do it on a 1-to-1 basis. So for example, if you have a customer that wants to buy $1 million property, they would put $1 million in collateral with us. We custodian the crypto, and we can lend you $1 million to purchase that property. So you're getting 100% financing. You don't need to liquidate any of it, no capital gains, and we're able to finance the loan for you. On the other side, the seller is kind of not included in the crypto. They're just going about business as if it's a normal real estate transaction. So with that being said, I think we can open it up to some questions.
Yeah, feel free to send any in the chat.
Trying to pull up. So,
don't be shy.
Yeah, I can do this off with a question that I know that we often get. So this one would be for Rafa. How do we as a business incorporate with the blockchain?
Okay, I see that you have some questions here. I can start by answering your question. Like, I'm a huge fan of blockchain, and I'm also a huge fan of simplicity, right? So I often receive the question that, oh, do you guys have a token? Are you guys using blockchain to store XYZ? Crazy ideas blockchain related, and to make sure that we can generate a really good mortgage and be in between the traditional financial system and a Web3 company. We are just using blockchain rails. We don't have a token. All we do is transfer a crypto. You initiated the transfer of your crypto from your wallet to our third-party custodian, that in this case can be Gemini, FTX, or Coinbase. And with the crypto in there, the crypto is still yours. We are just holding for our protection. Whenever the payment is made, we just return the crypto for you. If you gave 10 Bitcoins in the end of the term, it doesn't matter. The price of Bitcoin can be $10 or 10 million. You're going to receive 10 Bitcoin back. We don't talk in dollars. We talk in token numbers. So I hope that answers your question, Colin.
Yeah, you're good. So it looks like Ray got the first questions on here. So a couple loan related questions. So prepayment penalty. Most of the loans that we do are investment related. We're certainly working on some loans for a primary side as well. But with the prepayment penalty on the investment loans, there often is a small prepayment penalty. but it really just depends on how we structure the loan. Sometimes there's a prepayment penalty. Sometimes there's not a prepayment penalty on the crypto. So it really depends on the exact loan structure. And then I see Ray had another question here about just tokens and margin requirement. So right now we're accepting Bitcoin, Ethereum, and USDC. Those are the three tokens that we accept. And we do have a kind of a margin call set up. Basically, once the value of the crypto that you gave us gets to 65% of the decrease. So for example, if you give us $1 million, once that crypto gets to $350,000, we will let you know that, hey, can you either put some more crypto in the account to get over that margin call, or the crypto would be liquidated. You know, as a company, we don't want that. You know, our goal is to keep the consumers with crypto. We have never actually had to do it on any of our loans due to the fact that, you know, we're way over leveraged. So, you know, 65%, it's a large drop. So it's not like if it drops a little bit, you know, you need to be worried about the crypto. It would be a rather large drop, and we'll give you plenty of warnings that the liquidation event may be coming before the crypto would get liquidated.
Yeah, I'd like to add on that, Colin. There is two questions that I think it can be related, right? One is around the margin call, and one that is, what if I don't have $1 million in Bitcoin? So the $1 million was the example of that we had, but our goal is we are willing to provide you the loan amount. Let me rephrase that. We need to get the exact amount of collateral against the loan size. So if you want to buy a $500 million property, $500,000 property, we need $500,000 worth of crypto. Again, this is the first version of our product. We see that there is a market fit, and we decide to ask for a one-to-one with the loan amount, just for the sake of protection. Our protection, the borrower's protection. So the first loans that we originate crypto. Bitcoin was at $50,000, more or less. We didn't have to issue a margin call for this customer. Crypto dropped heavily, and we didn't issue the margin call. Why? Because we over collateralize ourselves, just to say, like, we don't want to deal with liquidation. Liquidation is bad for both sides. We look bad as a villain, and we're going to end up liquidating crypto from a consumer that believes in crypto. So this is our main goal. Later on, I'm very confident that with the stabilization of crypto prices, we're going to be able to require less collateral for the transaction. So not one-to-one, maybe half of that, maybe 50% of the total loan amount. So there is things that we are exploring internally that we can do. And the better crypto is as an asset class, the more risk averse we can be as a company.
Yeah, just to piggyback off of that, like, we're seeing crypto, obviously, they're calling it the crypto winter, where we've seen the price decline. But if you can think about what the environment looks like as crypto rises, right, as Bitcoin rises, you can essentially pledge it as collateral, and it's being held as the asset's rising, right? You're still able to borrow against it. So think about it in terms of both sides, because it can be quite lucrative for you if the asset is rising, which we all know will happen at some point.
Ray asked another question. The margin call is tied to a loan. What is the collateral for the transaction? The token, the real estate, or both? In this case, it's both. That's why I believe that we can lower the requirements in the amount of collateral in tokens that we need, because we also have the real estate to protect the transaction. And another thing that you mentioned is the margin call is going to happen if such a coin or token drops to zero, let's say. That's why we are very strict, and we don't accept all the tokens. We try to do a very, very strong due diligence on what tokens we are going to accept. So right now we are just with the two biggest ones in the matter of tokens itself, which is Bitcoin and Ethereum, and one variance of the ERC token, which is the stablecoin USDC. We are not even accepting USDT yet because our due diligence and the studies that we did, we are not 100% comfortable with the way USDT is being backed by the treasury yet.
As far as the interest rate, I see another question here.
Oh,
It's
yeah.
it's market based. So we're gonna follow the rest of the mortgage industry. So, if the industry is typically charging 7, 8, 9 for that specific loan product, then we'll follow suit.
Yeah, like it's a great example, right? We launched the product in the beginning of the year. We went to the North America Bitcoin conference. It was great. We made a lot of noise. I spoke with a lot of people. And by that time, we could have a rate of 3.95%, which is lower than 4%. And everybody was super excited. We did originate really low interest rate loans, but then as anyone that follows the real estate market and the mortgage industry, we noticed that the interest rates have been rising tremendously, not only for mortgage, but for any kind of loan, regular loans, crypto loans. So then we had to adjust. Another thing that we received as a first question is around prepaid penalty, right? So there is a whole industry around mortgage, and whenever we have a prepaid penalty on the mortgage, we can value the mortgage better, which means that that's going to impact the lower rate. So if you don't want a prepaid penalty, the rate might be slightly higher. If you accept a 1-year prepaid penalty, the rate's going to be a little better. At 3 years, a better rate, and at 5 years, an even better rate. So we have a beautiful application that is going to give you a rate, but if you don't want to play by the rules, we can always negotiate and see how can we reduce some terms to satisfy the transaction for you. But remember that every change that we do on our side is going to have impacting rate. Mortgage is a very sensitive product in the matter, like whenever we're talking about data points, they want to see a very standard mortgage being generated. And this is the challenge that we have. So the more customization, they are going to penalize the transaction for that, meaning increasing the rates. Any more questions? I'm here really to answer all of them. Any blockchain questions? Any blockchain analytics, KYC? I can mention many good stuff about the transparency of blockchain. Blockchain is actually not a black box. It's a very open box. It's very transparent, and we can see everything. So if you guys have a question about that, I'll be happy to answer you. Okay, so we didn't have any question for that, but either way, I think it is a good topic. This is something that, especially when I'm pretty sure that all of you have a pretty decent understanding how blockchain works for the audience. And everybody says that if you want to hide your money, you put on blockchain, right? Yes, if you put the money in a wallet, the only thing that I know that key, that public key that I can see has X amount of tokens. And I cannot relate that public key to an individual itself. At that moment in time, it's completely anonymous. But whenever I transact with you, if I ask, hey, can you send me a Satoshi? And you send me a Satoshi, and I know that you are the owner of the wallet, I can basically see every single transaction that you did in the past. It's just like open banking on steroids. And I have to say that every single transaction that we do, we run a KYC. We do an investigation to see if that wallet is related with any criminal, any criminal behavior, any purchase on the darknet and things like that. So we use the same tool that the FBI uses. to run investigation, see if it's good for us to transact with that customer, and then we move forward from there. Blockchain is really transparent. You can see how many transactions our wallet did, for who the wallet sent or received money from, and the amount of tokens, if the transaction was illegal or not, based on a huge database that the FBI and companies like Chainalysis, Merkle Science collect, and is what they call a blacklist. So they have wallet address they put on blacklist to show that those addresses have been related to a illicit transaction.
And I'm going to send a link here to everyone. We've created the first pre-qualification online experience. If you have crypto, right, you can actually go through the application and plug in your information, and you can get a pre-qualification letter, right? And so I'll send that link here in the chat.
Okay, thank you. I don't see more questions in the chat. Maybe people are thinking, or maybe they're very clear. I have a question. So if somebody is on a traditional mortgage right now, maybe somewhere through the mortgage, and is it possible to switch to a crypto mortgage from a traditional loan?
So you're saying that they already have a traditional loan?
Yeah.
Yeah, I mean, it would basically be the same process as doing a refinance. So you would be doing a refinance to pay off the traditional mortgage to get a crypto mortgage. Realistically, the only reason you would do that, depending on the rate and the terms of your current mortgage, would be to access additional equity in your property. So typically, if you were to do a refinance, you could maybe go up to 70, 80% of the value of your property. With the crypto mortgage, if you put the collateral up, so if you have a $500,000 property, if you're willing to put $500,000 of collateral with us, we will give you a $500,000 loan, so 100 LTV. So the real reason to do that would just be to access the additional equity in your property. But yeah, we would, it would be the same process as a standard refinance.
In addition to a product and a technical product, crypto, how we are dealing with blockchain and all of that, I set up today is not only a backend product, right? How we structure the product, but also digital applications. So I invite all of you, just go to our website and simulate one application and see how the application responds. We have a very good team of engineers, designers, and we work really hard to make the experience outstanding. So if you want to take a look, it's always good to see how the backend is working. Yeah,
we'd love feedback from all of you on our web application, and if we can improve it in any way, please let us know.
Yep.
So I see we got some questions coming in. So Felix, the interest rate question, I get it all the time, so thank you for asking it. So that rate would be more prone to an investment property. I would say right now in the US, if you're going to buy a primary property, say you have really good credit, you're going to put 20% down, income is great, it's an easy loan, you're probably looking somewhere in the mid to high 6% range, maybe even up into the 7% range. So, when you're looking at an investment property, even if you didn't do a crypto mortgage, just an investment, the rate is always going to be higher on an investment property than a primary. So if you're looking in the term of just investment properties, then that rate would be very competitive and accurate for where the market's at right now. If you're going to compare it to someone that's buying a primary, putting 20% down, great credit, it is going to be a little bit higher. But our main product is on an investment purpose.
And just to add
And
to that, if you're going to compare it to actual crypto lenders out there, right, that are offering you loans, right, the rate is actually quite good. If you were to like shop this, if just, you know, pledging your crypto and getting a loan, the rates are higher than this.
Yeah.
and
More collateral.
and I see a very nice question from Dan. It's good that he digs some information to come up with this question. So there is a few things in there, right? One is the money that we raised. So we raised $17 million in our last round. And in our first round, we raised $6 million, which is a good total there of 23. If you break down, it's gonna be up almost 24. And this is the money that is meant to increase our team. Salaries, office, pay software, AWS, which is not cheap, and all these things that we need to run a business in a healthy way. And we use some of those money to fund the loans, but the good thing is with the mortgage industry is the ability that we have to trade. So we can scale our product. So whenever you see $10 million that we did, that was only in crypto mortgages. And since we launched, so we did $10 million in 3-4 months, very, very quickly. But in mortgage that we've done as a company, I think we did almost $200 million, something around that. And the good thing about the mortgage industry is you don't need to raise money to originate mortgage because we don't keep the mortgages. We are direct lender, we originate, we have our rules, but the mortgage industry, whenever you look into a big company that is originate a ton of mortgages, they usually sell those mortgages for investors. Depending on the format of the loan, is to an investor. If it is use a primary FHA loan, is for the government itself. So those things are the ones that you start to, and that's how you get money back. You originate the loan, and then you give this loan to another person, and then you get the money back, so you can generate more volume. So that's the beauty of setting up a credit product properly, is because you originate with your capital, you set up a pool of loans, you sell it, get the money back, and put the money on the streets back again. So it's like a cycle that to be able to grow as a company is needed to define those plays very properly. And I see that you put another question. The benefit of, yeah, so the way that we set up this product is we take care of the crypto. Whenever we sell a loan, we are not selling, we are not giving your crypto for another person to control. It's in our third-party custodian, right? And the crypto is just being used. Let's say, if you don't make a payment, if you're missing payments, then I'll have the right to liquidate a little bit of your crypto to satisfy for those payments. It's just a way of mitigating the risk in the transaction, but your crypto never leaves our qualified custodian to go to somewhere else. So let's say that we're gonna sell the loan to the government, or we're gonna sell the loan to a different investor. We have an agreement with them saying like, I guarantee to you 6 months of payments. And the way I'm able to guarantee that is for 2 reasons. One, my underwriting process. I'm giving the loan to you because I believe that you are able to pay and that you are gonna pay your loan. And also, if you decide not to pay, I still have the right of selling part of your crypto to satisfy for those payments. This is the main idea, but the crypto is always in the custodian. We believe in crypto. We want, and what I really like about getting a mortgage with crypto is you get a very, very irrelevant asset, which is crypto. If we look in all around, right? Crypto is a baby, it's irrelevant. We talk about $2 million worth of crypto. If you isolate only Ethereum and Bitcoin, is less than $1 trillion. If you look only to the residential real estate market, only in the United States, we have $60 trillion. So we are talking about something that linking crypto to real estate is extremely advantageous for the crypto community, because the crypto is out of circulation, which is going to reduce supply. Demand is going to increase because it's another application for the crypto community. So price can go slightly higher. And if there is panic in the market, we with this product, we're able to remove crypto from the market so that it's not panic selling and those things. Yes, that's correct. That is a secondary market to take the mortgage off our hands. Like, I really like those questions. Like, it can get harder. Like feel free to ask really hard questions.
Please ask hard questions.
Okay, that's a nice one. You definitely can use
Combination.
a combination between. So we have different products, right? We have a crypto mortgage for a stablecoin that you don't need $1 million because there is no volatility, or we have volatility but it's minimum, so we don't need as much of collateral. So we don't need a one-to-one. We can get like just 40% of the total loan amount, but you can definitely combine Bitcoin and Ethereum, or Bitcoin, Ethereum, and USDC. But any combination that you use and a token like Bitcoin and Ethereum that are volatiles, you need to play by the rule of one-to-one. That's actually a very common question. So as right now, we are not allowing the customer to raise a hand like, oh, I think crypto is gonna change in price. I would like to switch that for USDC. We don't offer this capability yet, but it's something that it has been asked very, very, very frequently. This is something that needs to be really well thought, because whenever you switch from Bitcoin to USDC, is the same thing as you selling crypto, you selling Bitcoin, and it's going to impact in capital gains, and this is a taxable event. So you need to keep in mind that if you do this transaction and you gain a lot of money with crypto over the years, whenever you execute this transfer, this is going to be a taxable event. So you need to pay tax on this transfer. So this transfer needs to make a lot of sense to be made. Ideally, what I really like and how I would use this product is, I believe in Bitcoin. I really believe that in 30 years, this is not going to be a joke. The price is going to go high, but I want to take a leverage of this asset. I'm going to put in there. There is some things that we do in the, like on our side, if crypto goes up by a lot and we are super over collateralized, we just give some Bitcoin back to you. There is no need for us to be holding like 3 or 4 times the amount of the property if crypto is such appreciate. So there is some features in the product that we already released for the community, just for the sake of, hey, we are here to help. We are not here just to get the crypto and be safe with the loan. We believe that people want to hold their crypto, right? If it's not your keys, not your crypto. So we try to help the people that are very excited about the crypto market. The rates vary based on the property type, or the range for commercial rate. So for property type, we are not changing so much the rate. It might have impact here and there, but it's not so relevant. But the loans that we are doing is mainly residential loans, is not for commercial loans, right? So if you want to buy a property that is a residential property, yes, we are here to help. Commercial mortgages, we are not there yet. For crypto, I believe the next niche of consumers that we want to expand for primary homes. We noticed that most of the people they have crypto, they're buying their first house, and our product is not perfect for those consumers. We can do a few, like no questions asked, but for license and the way the mortgage needs to be originated is a little bit tricky. So we are at this moment, we have conversation with our team. They are always trying to see what is the best way to create the procedures to be able to move for primary loan. Commercial loan is not something that is defined in the roadmap, but it's something that we're definitely going to work later in the future. I can't provide a timeline for that. Okay, so if you don't make the payment, this is gonna, it has a few different ways that it can play out, right? Let's say that you don't make a payment and we need to collect this payment. We're gonna wait for the next month. We're gonna communicate with you and so on, but there is a limit that we can wait for that, right? It's not that if you miss a payment, we are going to liquidate your crypto and just satisfy the payment right away. The beauty of Milo is we are a tech company, but we are backed by real people. So if there is any liquidation, anything that you're gonna touch your crypto, we're gonna talk with you on the phone, through email, SMS, WhatsApp, we chat. However, we are going to talk with you to understand the situation and try to work you as a partner instead just as a company that you had a relationship once. What gives us the ability to do this is we're not a regular loan company that you have ton of loans and you need to play in the base of automation heavily. It's a real estate transaction. We don't have a billion of customers. We have good customers and large transactions, so we can talk with those customers in a very personalized way. So you can easily call Milo and talk with Colin, talk with Aaron, talk with me. Primarily, you're gonna talk with those two guys, but like it's possible to get into like to anyone in the company if you need to talk and there is an issue with your loan, with your process, or something like that.
Awesome.
Did I answer your question, Dennis? I hope I did.
Any last minute questions? We have a couple of minutes.
Okay, so if there is any question that you guys come up in the future, feel free to look me up on LinkedIn. I'm pretty active there. Just shoot a message and let's go. Simple as that.
Yeah, thank you everyone for joining. And if any questions come up after, like Rafa mentioned, please reach out to us. I'll put my email here in the chat. So if there's anyone that has any questions, you can reach out to me and we'll make sure we get the answer back to you.
Yeah, I'll just reiterate, thank you so much. Thank you to the Chinese Institute of Engineering. It's been great to present Milo to you and our crypto mortgage. And again, any additional questions, feel free to reach out. And thanks again for the opportunity.
Great. Thank you so much for the introduction to crypto mortgage. Yeah, I believe our audience has learned more about the concept, the practice, and also your company. And yeah, thank you so much for offering this knowledge to us. And once again, we encourage you guys to check our upcoming events on Eventbrite on our newsletter, on other social media. And yeah, let's thank our speakers again. Thank you, Milo. And yeah, see you guys next time.
Sounds good. Thank you very much.
Yeah.
Have a great
Thank you,
day.
Aaron. Thank you,
Have a
Colin.
good one,
Thank you,
bye.
Rafael.
Bye bye.
Okay, bye. Bye. Okay, thank you, everyone. Bye.